please make sure that you register for the upcoming Profiting from CTKS Methods Structure course. You can get it absolutely free, but conditions apply. You'll find it incredibly valuable. Just pop across to ctksmethod.org. To give you a little bit of a preview of what is coming inside the course, you can see on Dogecoin, these little green arrows are where I bought. The little red arrows are where I sold. You'll notice that there was a pretty big cascading sell-off, and I realized by looking at the cheat sheet it was time to get out of the market. Of course, I'm always interested in scaling in at structure. Also, you'll see that I'm adding positions. So I added here, added there, and you can see a lot of adding going on here and here and here, and exiting up here. But what did that actually make me? If you watch a lot of YouTube videos, you'll see there's influencers putting $20 on a trade and saying, this is how you trade and you can make a huge amount of money. Okay, I'd really love to see them putting 100,000, 200,000 or more into spot trades. Now, why is this the case? Because if you can do it, you can manage a large account. You can see here were 3 buys, and one was 100,000, this was 20,000, and this was 50,000. So this is 170,000 US dollars at spot, which just in a couple of hours turned a $3,477 profit. And then you can see I went on a bit of a buying spree, and then I went on a selling spree. This was all done in strict accordance with the cheat sheet and of course CTKS structure. I will not place any trade. I'm just simply putting too much money into the market if I don't know where the structural levels are. And if I don't look at the cheat sheet, it will bite me, and bite me hard. In other words, it will cause tremendous loss. So therefore, I'm pretty religious. I follow the cheat sheet. This trade lasted 5 hours, 30 minutes. I made a $9,148 profit, which is equivalent to 14,000 Aussie dollars, and that was in 5.5 hours. A little bit later on, with that particular trade, I started adding again to create a profit of 1,488 US dollars, which is about 2,300 Aussie. That brought the profit up to 15,500. More detail will be inside the class, Profiting from CTKS Method Structure. Of course, there's a lot more to this trade, but the one thing, I would not put on any trade if I do not know the structure and I haven't done the cheat sheet. You will find that doing the cheat sheet is the absolute minimum requirement to be consistently profitable. I would suggest that you can't be profitable if you're not prepared to do it. When it comes to doing the cheat sheet, at the start it will be all over the place. You just won't understand what you're doing. But over time you will see that all of these different rows make sense, and I'll be guiding you in the daily channel as well. The Cyber Monday sale is still on, but only for about a day. Please get the premium plan because it is as cheap as, and it is your tool as well. One thing that you want to be very aware of, if you don't have the right tools, you will not succeed. Don't think about making returns like I make if you don't have any tools to support you, or you simply don't take it seriously. You need to think about yourself as being like a pro athlete. A pro athlete is at least going to buy some good runners. How about just think about it like that? Level 1 and Level 2 standard certification draw what are called Stanfield levels or CTKS levels. You'll see these on the charts that I'm going to show you next. Thicker is always stronger. The definition of Stanfield levels or SLs, they're also known as CTKS levels. They represent the most statistically significant levels where smart money will buy or sell in the future, and thicker is always stronger. These are formed across all of price history in strict accordance with Level 1 and Level 2 standard certification from ctksmethod.org. Service members get 32 TradingView charts with structural indicators and monthly price paths. Let's get into the cheat sheet. Row 1 is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and crude oil. As a lecturer in statistics for many years, I explain measures of central tendency, which includes EMAs, SMAs, and all sorts of statistical measures. One thing to understand, this is the 20 EMA here. It's playing out on the VIX. It does give you a good idea that the VIX is currently going down, if you couldn't tell that from the chart itself. We can also see that the DXY is currently under the 20 SMA. Now, what the hell does this actually mean? It means absolutely nothing, because what you need to understand is where the structure is. If you don't know where the structure is, market structure, you don't know where price is going to come down and find support and rebound. If it can't get above, it's going to the structure below. And we're seeing with the DXY currently, it's breaking through its level of structure, just south of 106,400. It's got a level of structural support at that 106,260 mark. Of course, you could look at the chart with SMAs and EMAs and all sorts of different things like this, but it will never give you an understanding of where the actual market structure exists. And if you're putting anything significant into the market, I would urge you to look at structure. For example, let's look at the 10-year. The 10-year bounded up, bounded down, and now has turned around. The EMA is telling us this, but what is structure telling us? What is actually going on underneath the hood of price action? We can see at that 4.24% and down at the 4.2, there was a positive CTKS gap and it rejected at the 4.24. And it came straight back down. But look at all of this underpinning structural support. Of course it bounced. And this is despite the fact that the Fed has a 75% probability of lowering the federal funds rate. Technically, the rates shouldn't be bouncing up at the current time, but that's because of structure. When you understand market structure, you understand the king of technical analysis. Okay, that's pretty interesting, but what about oil? We see it's come down and it's doing something. Ooh, it's being supported by the 20 EMA. Now, what does that actually mean? Zip all, actually, because it doesn't tell you where you can enter, where you can exit, where you've got a trouble, where you're coming into structural resistance, and it's literally at the 68.60 mark. We're literally up to structural resistance. And what does it mean? If price is coming down, where is the structural support? If you don't know where the structural support is and you're just relying on EMAs or SMAs, you're in a lot of trouble. If you're liking the video so far, please smash that like button and don't forget to subscribe. Hit the notification icon as well. If you want to get a feel across all markets, this is the best place that you could be. Row 2 is junk bonds, the euro dollar, the Aussie dollar, gold, silver and copper. We can see by the 20 SMA that junk bonds, which gives us a risk on or risk off indication, is saying, hey baby, it's a little bit risk off at the current time. We've also seen the euro stage a bit of a rebound and the Aussie dollar stage a rebound. What is happening with gold and silver? It's just basically flatlining at the moment. Silver is taking off. Why don't we look at these structural levels on gold and silver to see if we can get a better indication as to where real support and resistance are? Okay, going into gold and just turning on the indicator from the service. We can see pretty clearly that gold got up to that 2660 mark of structural overhead resistance. Now, structural overhead resistance is marked up across all of price history, and we can see that it just churned and burned all the way down to the 26 level of structural support. It then tried to retest this structural level just south of 2650. And it's done it again. It's trying to do it again with the concept of yields going down because the Fed will cut the federal funds rate. We would anticipate that gold will get through this 2650 level and go higher. You can see that if you were actually trading gold, it would be very difficult to come up with the actual structure inside gold's chart if you didn't mark up the chart with the CTKS method. And that method reveals structure across all of price history. Let's have a look at silver. We'll just do the same thing and turn on the indicator. How does market structure actually work? You can see that there are areas of structure inside a price chart. Those areas are always read exactly the same way. You've got thicker lines and thinner lines. You've got clustered lines and lines that are spread apart. You can pretty much figure out that when you've got a lot of structure underneath and they're clustered, that acts as a very good area where the market will react. And we saw that at the $30.30 mark, even though silver was coming down, it got caught by structure. And it had two levels of overhead structure that it sought to get through, but was pushed down. You can make an absolute fortune if you understand where the structure is. For example, as we got above the structural resistance at 3060, everybody thought this thing is going to the moon. Nah, it's going to a structural resistance level, and then it's going to interact with that. And that's exactly what happened at that 3091 mark. Row 3, the major market indices, the S&P 500, the Dow, the Nasdaq, and the Russell. Let's have a look at the structural components of the Nasdaq. We see at that 19368 level, we've got a very good level of structural support. Structural support must be drawn across all of price history, not just the past week. We can also see that the S&P 500 is grinding slowly up, the Dow is under pressure, and the Russell is just pretty much flat. One thing of note, the S&P 500 sold off into the close. This means that people were saying, yeah, I don't want to be holding this. It's a very good idea to keep your eyes on the futures, and when we look at the S&P 500 futures, we can see they came up and then basically stalled. The Nasdaq came up and stalled. The Dow came up and then crashed down. What did the Russell do? It came up, came down, came up a little bit, and it's under negative duress. One of the things that you can see with Bitcoin's price chart, everything was going really, really well until the US government decided to dump $2 billion of Bitcoin on Coinbase. That kind of shocked the market a little, and we've seen this thing play out time and time again, so it tends to rectify itself. One thing to note, the Nikkei has been doing really, really well, and the DAX looking good. Row 4 is Apple, Microsoft, Tesla, and Nvidia. Here we've got the 20 EMA on, and it looks to be supporting Apple's price. Tesla support on the 20 EMA, Microsoft supporting, and we can see it's getting a little bit wobbly on Nvidia at the current time. Just say that you saw Microsoft and you said, I'm going to buy because it's coming into the 20 EMA. And that was your solitary decision. That was your trading plan, your trading strategy. And you had no idea where market structure was. The first thing that you would need to understand, you just actually lost a level of market structure because that is a resistance level. And up above Microsoft are some very, very substantial structural resistance levels, meaning if you got in here and thought it was going to the moon, yeah, it's got to get through that structural resistance first. But of course, down below, around that 425 mark, there's a lot of structural support. But unfortunately, a lot of statistical measures just won't show you this. You need structural indicators. Row 5 is the crypto market, total crypto market cap, Bitcoin, Ethereum, and MicroStrategy. It's very important to look at total crypto market cap to inform your decisions where the entire crypto market is going. Now, what is it showing here? There was a big push down, and it's probably because of the US government seeking to sell $2 billion worth of Bitcoin. Of course, the US dollar currency index, when it did its spike, didn't help either. And we can see that we're currently under the 20 EMA. What about Bitcoin? Well, it did that spike with total crypto market cap, and it's currently under the 20 EMA. What about Ethereum? Yep, it's under the 20 EMA, and MicroStrategy is in the Nasdaq. And Michael Saylor is at it again. He just bought some more Bitcoin. A lot more. But our key is to know where the structural levels are. So where is the structure inside total crypto market cap? what you want to do is to look at the peaks here and on your crypto charts, because this level of overhead structural resistance plays out across the entire crypto market. In other words, the market structure across the entire crypto space is interacting at that peak, and all of the other peaks. Have a look at this. What was that saying? It was saying, wow, we are going for it. And then the very lovely US government said, no, you're not. We had a bit of a sell-off there, but where did it sell down to? Total crypto market cap structural support. That's interesting. And you can see it playing out through all of these different charts. Now, one of the things to just bear in mind, if we start to lose this lower level of structure, which Bitcoin is a little bit weaker at the current time, but if it dips under there, there's a negative CTKS gap here. We'll look at Bitcoin structural levels in a moment. But if we get above this structure, hey, baby, it's back on. Okay, that's pretty interesting, but we really need to see where Bitcoin's market structure is. And what are we seeing here? You can see around this total, which is 97,168, that coincided with the structural resistance level of 3.14 trillion. You can see underneath here, when Bitcoin sold off, it was already under a level of structural overhead resistance around that 95,800 mark. Now, this is a bit of a problem for Bitcoin because we've actually entered a negative CTKS gap, and if total doesn't actually support the entire crypto market, we could find ourselves falling to that 93,730 level. Now, remember how negative gaps work. They also work as positive gaps. These are areas of high volatility. Therefore, you better as hell know where they are, because when they just get filled, they're going to go up and down. You could say it's pretty important to know where the gaps are inside the market before they occur. And that's why the CTKS method is literally the world's most powerful smart money buy and sell level detection system, because it gives you market structure to the right. Now, typically market structure is determined by left looking. For example, fair value gaps are a 3-candlestick pattern, etc. That means it's already happened. We don't do that. We're ahead of the pack. We know exactly where things are because we have structure. We understand what's going on inside the market. You can see Ethereum at that 3,700. There's a lot of overhead structural resistance. And you can also see that ETH has become weak again. Oh, ETH, come on, man, put it together. ETH was starting to look really good, and then the wind came out of its sails. But at least you know how things interact. For example, when ETH was coming up, total crypto market cap was coming in to overhead structural resistance, and ETH was coming into its fair share as well. That pushed it down to find lower levels of support, and this is exactly how the support works inside market structure. If you know where it is, you know your support levels, you know your resistance levels, you know everything. You have X-ray vision. There's nothing stopping you looking at candlestick patterns and trying to determine where price is going without a structural understanding. But price always obeys structure. These EMAs and SMAs always obey structure. Bollinger Bands always obey structure. All statistical measures obey market structure. It's really important to know where the market structure is, and you don't want to look left, you want to look right. Row 6 is Litecoin, Binance Coin, Ethereum Classic, and Bitcoin Cash. What we do with row 6 is to triangulate Bitcoin, Ethereum, and total crypto market cap. One of the things that we're seeing when we look at the 20 EMA is Litecoin is going up and all over the place. It's going up and it's got a degree of positive momentum, but we'll look structurally in a minute. What about Bitcoin Cash? Well, it's following Bitcoin's price momentum, but it's doing so a little bit more strongly. And we've seen really good outperformance by Litecoin and Bitcoin Cash recently. What about Binance Coin? Binance Coin, as we see, is just grinding a little bit higher. Ethereum Classic, we really can't tell much from any of this because we need structure. We need to know where the buy and sell levels are and how clustered they are. Let's have a look on Litecoin and seek to determine where the structural support and structural resistance levels are. We can see that there's massive structural resistance at that 140 level, and there's a fair degree of structural support at the 123. In other words, Litecoin could become range bound. This is typically a consolidation path. If you've ever wondered why price consolidates, here you go. This is why. Row 7 is Cardano, ADA, Dogecoin, Solana, and XRP. XRP has been going on a monster rally recently. And something interesting is going to happen with Dogecoin. On the 5th, Doge, the Department of Governmental Efficiency, is going to go to the Senate. That's right, Elon is going to present Doge to the general public. Expect Doge to do a rally, but don't bet the house on it. Just be really careful and understand where the structural support and structural resistance levels are, and I'll go through those in a moment. One of the things we've seen ADA, Cardano, has done incredibly well. For members of the service, how you actually update the indicators, just turn it on, you can see a little recycling indicator there, and that just basically tells you, hey, there's an update available. And then you just find those words there, right click on them, and update this script, and whammo. You now have market structure. One of the things that you want to be aware of with ADA, at this 131 level, there's quite a lot of overhead structural resistance. We had a positive CTKS gap and we had a structural overshoot, and that happens from time to time, but you must be aware things can get very volatile between 131 and 123. That means there's a lot of volatility you could take advantage of in that particular zone. That's what I wanted to show you. What about Solana? How's Solana's structural levels going at the current time? Well, let's check them out. Let's put this on and let's see what's cooking. Remember, everything is structurally bound. So if you understand where the structure is and there's a structural overhead resistance at 231, there's also a resistance level at 228. Down at 224, there's also another one. Now, what does this mean? If price comes up from the 224 to the 228 level, it's likely to flatline across there. If it can't get above, it's going to have negative structural attraction to the one below. And if it fails there, negative structural attraction to the one below. It's a very easy process to master market structure. It doesn't need to be complicated, but you need to know where the market structure is. If you're investing or trading in Solana, please keep your eye on Bitcoin. That is very important. And if you're looking at Bitcoin, make sure that you look at total. And if you're looking at Bitcoin and total, make sure that you look at junk bonds and the VIX, because they're very important as well. In other words, please make sure you do the cheat sheet. Now, why is that important? Because you know already where the structure is inside the market. You've got the indicator. All you need to do is to see what is the momentum and direction of the market. Is it upwards? Is it downwards? That's all you need to know, because you already know where the levels are and you use them to look to the right. Overall, the components of the cheat sheet are saying that risk-on behavior is anticipated, at least in the next 24 hours.